Hey everyone, Matthew here, and welcome to the break and retest video. This is kind of not like a hot topic, I don't think by any means, but it's something that I use to trade, and it's something a lot of people use to trade at my prop firm. It's something that I've taught a lot of people. It's something I use in things other than Forex, and I think it is a great way to trade for beginners. So we're going to go through the break and retest trading strategy. We're going to go over the fundamentals of what it looks like, how we actually trade it in Forex, where we set our stops and limits, and so on. So let's start from the beginning of what a break and retest is. And we'll go to the charts in a moment. I know it's hard sometimes to just hear it and not look at it, especially here on YouTube. But the idea is pretty simple. We're going to look for a key level or zone to be broken. And the first step is kind of identifying those key levels or zones. And we'll go over that in the charts in a moment. But we're going to identify a support line or resistance or a trend line or channel. I use the word line all the time out of habit, but it's important to know that these usually aren't just lines. They're zones or areas. Price doesn't bounce perfectly off one line all the time. And I'll show you what that looks like. So we're looking for price to break out of a zone and then return to that zone to retest it. So let's say there's a strong resistance line at 1.1 on the euro dollar. It tests it several times and then it breaks out above it, goes right through it. What we're looking for is price to come back down and test it and bounce up. We can do this with horizontal levels like support and resistance lines. We can also do it with trend lines or channels. In general, the more times we have something tested, the stronger the support or resistance, the better of the breakout we're going to see. So if it breaks out, we're not taking that initial breakout from the zone or from the area. We're waiting for it to come back, and then we're taking it. This is, again, a great way to trade for beginners. It's a relatively, pardon the stock market opening on my Thinkorswim. It's a great way to trade for beginners. It's relatively easy to see as far as price action strategies go. All you need to know is some candlestick patterns and how to draw support and resistance lines. So let's go to the charts and we'll show some examples, and then we'll begin kind of talking about setting the stops and limits and how to manage the trade. Okay, so I'm here in trading view. I'm actually going to go to our first currency and come over here just to show you what we're looking for. You're going to get my beautiful, oops, my phone is not on silent. You're going to get my beautiful artistic abilities here. But what we're looking for, and I'll draw an example of the first type, just one going up and one going down. So what we're looking for is price coming, let's say, up and doing something like that, where we have, pretend those are actually touching, where we have a line, and I'll actually extend that line out. And then what we're looking for is the breakout of that line and for price to come back here. Here we'll look for an entry and we'll catch it up. Now, the same thing could be said going the opposite way, where we'll look for something going short. So price will be, let's say, doing that, right? Kind of bouncing off this line. And again, same thing. We'll look for it to go down and come back to retest this area right here, and then we'll catch it short. I am not good at that, but that is the general idea we're looking for price to break out of a previous support or resistance line and then to come back and retest it. Now, this is just one type of break and retest, but it is the first type we're going to go through. So here I'm on the British pound Canadian dollar. Price is coming up here, and then it comes back down, and we kind of test this area. Now I'm going to put a line on the chart each time. It is, I think, really important to know that support and resistance lines is a complete misnomer. I'm not sure how we ended up with that name, but it really is a support and resistance zone. So the more realistic kind of zone is this area. And the reason I say that is because we tested it here, we tested it back here, and the wicks kind of tested it here. So really remembering that something doesn't need to hit the line exactly. It may go slightly past it. It may turn around just before it. Make sure to look back at the wicks and whatnot. For example, where this little red line is right now is where price is right now. That's technically in my zone because it's in there with the wicks. Anyway, so I'm going to use the bar replay tool on TradingView, and we can see price kind of touched it here, not really a big support, and then it came down and made a hard turn there. So that's I would draw the line there. Then it came down and tested the same area. So I'm just going to go back to right here. Right here on bar replay. So at this point, if it were live time, I would have this line drawn on the chart, knowing that I'm looking for a breakdown below it. The moving averages are moving down, which tells me I'm looking for something short, right? The green is below the yellow or orange, which is below the red, the 200, 50, and 20. So I'm looking for something short. So I'm going to just play here. So we're looking for the break, and there we have a break. Let's see. Not really, right? The candle closed there. We're looking for it to really move below. There we go. There we have a break. And there we actually have our first break and retest. Now this is only a 75, 60, only a, 40, not very many pips. Not a huge break. But nonetheless, it broke our area, it retested it, and we got a nice little reversal candle there. I actually didn't take this one because of the shape of that candle and how long of a wick it had. But we can see it break and retest. And I'll show you the one I actually did like the candle setup on. So I still have the line. I would still have this in my watch list, and we're just waiting for it to come up here and get some sort of reversal. And there it is. It comes up, it tests it, it reverses back down. So we'd enter here. It's showing signs of reversal. I'm going to put this on just so we can see. And I'm going to move it just so we can actually see where it is. I'm going to ignore most of the numbers over here. So we'd enter there. We'd set the stop up above the candles. And we're aiming for 1-to-1 on our TP1. So our TP1 would be about there, 1.752. And we're aiming for a 3-to-1 risk to reward ratio in the overall trade. So I'm going to speed it up a little bit. I think we got TP1 and then stopped on this one. Let's see. And yeah, we would have taken TP1 around 1.752, where we take half off the table, take half of our profit, and we'll talk about all the stops and limits here in a moment. But we would have entered there, taken profit, and then would have come back and hit and stop to clean us out of the trade. But there's a prime example, and again, if that went over your head, we're going to come back to that. We're just looking at entries for now. But there's a prime example of price breaking a support, coming back and retesting it and bouncing down. That would have been a winner. Another one we have here is on the Singapore dollar Japanese yen, which I realize is a pair not everybody trades. It is one I trade. I trade Singapore dollar mixed with all the major currencies. I find it to be profitable and work just as well as other pairs. The only thing is when you mess with the Singapore dollar, you often will get higher spreads. The Singapore dollar yen actually isn't a horrible one. So I'm not going to do the whole bar replay again this time. That was a short one. Here's a long example. And what I will do is again just show that there's a little bit of a zone here, right? Like we could draw it, I would draw it like somewhere around there is where we're looking at, and I'll extend it out. Where price tested this area 1, 2, 3, 4 times. And then, and I'm actually going to delete it because I work with lines. And then we have several good opportunities here. So price broke out, right? We can see here where my cursor is and where the crosshairs are, that we're well above the previous high, that zone. And we came back to retest it pretty clearly, and we got a nice engulfing candle. That candle engulfs the 3 previous to it, a strong reversal candle. So I'm not even going to put the risk to reward there, because I can tell you right now, we would have said stop there. TP2, 3-to-1 risk to reward, would have been somewhere, it was somewhere up here. I took this trade, and then it kept going. So that was an absolute winner. But again, just breaking right there and coming back to retest. The moving averages are moving the right direction, right? The 20 is above the 50, is above the 200. Now over here, you can actually see it test again. I wouldn't have taken, well, on the first test, I give it a little more leeway. On the second test, sometimes what happens is we kind of float around near the support or resistance line. So we look for, I'll just say we look for a good reversal pattern. So there's one right there, a good engulfing candle. So we could have taken that. We probably would have gotten TP1 and come back to stop. If we didn't get TP1 there, we definitely would have up here. Our stop would have been down here. This one I can actually do because I'm not quite sure what happened. Let's see, stop would be down there, 1-to-1. Yeah, so we would have hit TP1 here, and then probably it looks like back to stop there. If not, yeah, we wouldn't have, let's scroll out. We wouldn't have 3-to-1, we want that 3. If that didn't hit our stop, we actually would have gotten TP2 on that. I'm not sure if it did, depending on the entry. But again, the point being, we're just looking at entries. Price breaks this little support resistance zone or line. It comes back and retests it and goes up. Then it comes back and retests it again, and we actually get another entry. I will say here that we're going to talk about setting stops and limits and where they go. And we'll talk a little bit about what candlesticks I look for in these. But be sure to check out, if it's not uploaded yet, it will be soon, or you can subscribe. Be sure to check out the setting stops and limits video on our channel so you can see how we set our stops, where we set our limits, our TP1 and TP2, moving stop to entry at TP1 and all that. And I'll go over it a little bit. As far as candlesticks, I essentially look for a couple patterns. An engulfing candle like that, a candle that engulfs the one previous to it. One of the other great reversal candles I look for, here's actually an example, is the morning star, evening star. A big candle coming in, a little doji at the top, and then a big candle out. And then I'll also look for the 3 inside or outside, which, let's see if I see one. So this is a good example. Price came down, and these 2 candles are bigger than that candle. I'll circle them. Oopsies. All right, so that red candle going down is smaller than the combination of this green candle and that green candle, which shows a reversal back up. So again, I look for an engulfing candle, I look for a star, or I look for a 3 inside. So we'll go over that more in the candlestick patterns video, but there's a good example, engulfing candle, and there's a good example of an engulfing candle. So we'll just do one more example here on these horizontal breaks and retests. And half the time I do this, I didn't mark down where it was. All right. So this one, I'm going to put the line right there because that's where I probably would have put it in real life. And keeping in mind that it can go as far down as the wick of the candle. But I'm going to keep it there because I usually put mine around where the body of the candles are, not the wick. Now this one didn't get tested multiple times, but you can see price was coming in. You don't need any indicator to tell you that's coming in a downtrend, but the moving averages tell you that too. Then price bounced back up and kind of fluttered around, right? That's still being the low. So as soon as price broke it, we're looking for a short off that line. Now if we drag this down to the tip of the wicks, we actually got one there. That is definitely something that could be taken. Let's see what it would have looked like. Again, I'm just going to drag this out. I know it messes it up a little bit, but just so we can see, we would have set stop above this little swing high there. And let's see if we would have gotten TP1. Yeah, we would have gotten TP1 there, and then price would have come back to entry, so we would have gotten about half of our risk. So if we risked $100, we would have made $50 on that one. Now here it comes back and tests again, another good one. It comes right back in, gives a little candle, and then the big one, the 3 inside down. If I call a pattern the wrong pattern, it's because I don't care. I know that I'm not great with the names of them, but what matters is being able to see them. So please forgive me. So let's just look at that. We would have entered there. I would have kept my stop above those other candles over here. 1 to 1 would be right there. We would have gotten it, in 2 candles. That wouldn't have stopped us out. And let's see if we would have gotten 3 to 1. Yeah. Would have gotten 3 to 1 there. All right, some technical issues, so pardon the weird little skip there. But we're going to move on to the same idea, but in a angled fashion. So I'm just going to draw if I can find it, a parallel channel. And what we're looking for here is basically the same thing. So prices in this channel kind of, doing whatever. And then it breaks out and comes back and retests it and continues. Of course, it can go the other way as well. Prices in this channel, it's doing its thing. It's usually not that perfect, and it breaks out and retests. Right? Same thing. It's the same principle as if it were a horizontal support or resistance. This one's just at an angle. So this is actually the 4 hour I took an entry on. And it is important to know I take these entries personally on the 1 hour, 4 hour, and daily charts. I do not go down to the 15-minute or 30-minute. You can mess around with it. I have never had success with those short of time frames personally. I barely open those charts. Sometimes when I'm doing trailing stops for other trading systems. But anyways, we have a nice little trend channel here, right, on the 4 hour. These are these moments where it kind of does that funky stuff here at one of the lines. I don't trade those breakouts. We want a real breakout, not a indecision breakout. But we have the trend channel: 1 bounce, 2 bounce, 3 bounce, 4 bounce, 5 bounce, and then we have the break right through, a little pullback and a break right through. And I know you could see that. In fact, if you go to the 1 hour chart, that might be. Oh, that's why I didn't trade that. Is if you look at the date at the bottom, this is February 19th, and this next candle is February 21st, which means that was the last candle, hourly candle of the day, and that was the first one of Sunday night Eastern time for me right now. So I don't trade that. That's absolutely not a safe entry. We'll come back to the 4 hour where we can see this breakout. Again, that's, you know, the end of the day and beginning, or end of the trading week and beginning of the trading week. So that's not a tradable candle for me. I just absolutely don't do that. And here we have the retest I'm looking for. Price comes in. It gives us a little doji-like thing there, a little hammery looking thing, and then the reversal. So we'd enter there. And again, we'll go over the stops and limits. We'd enter there. We'd set the stop, you know, down below the swing there. And 1-to-1 risk to reward ratio for TP1 would be right there. We'd get it. 3-to-1 is up here. We'd also get that. If we scroll out, here's another weekend gap, so we can't take that. And it looks like I actually took one here. I just can't find it. Oh, that was for a different reason. So the other thing that's interesting on this one is it comes back and retested a few times. Now, I don't trade that based off a break and retest. That reminds me a little bit of this back here where it's a little congested. See how this breakout is one firm candle through it. End of the trading week, little 2 candle pullback, and then it keeps moving. None of this little indecision tight range stuff. So right there is our breakout, or is our retest. Right here is our breakout. And I'll show you one more on the dollar peso, and this is the 1 hour chart. We have a nice little trend channel, right? 1, 2, 3, 4, another one of those little ugly mothers there. But 1, 2, 3, 4, 5 rejected there, and then boom, the breakout, a firm breakout. Now here is a bad entry. I took it on my demo account and on my live accounts, but I shouldn't have. There were a couple minutes left in the candle and it looked like an engulfing, so I took it and it pulled back. But if you look closely, it's not actually an engulfing candle. It's smaller than the one before it. It just happens sometimes. I trade, you know, if this was happening at 3 p.m. or 2:55 p.m., I'll enter it at 2:55 because it looks like an engulfing. Well, in those last 5 minutes, it fell down. Not the end of the world. I did get TP1 here, so we'd enter there. We'd set our stop down here and our limit at 1. Now, actually, when I trade some pairs like the dollar peso or the Singapore dollar or the New Zealand dollar around market close, I'll actually leave a little bit of extra room because of spreads and whatnot can just mess you up with low liquidity. But on this one, we got the nice breakout over here. We got the move up and then the pull back to the line. It tested it and bounced up. Here we got TP1 just barely, and then price fell back to our entry just 2 candles after. So that would have been a TP1. So those are just 2 examples of that that same idea of the breakout and retest, but on a non-horizontal scale. So again, we're looking at trend channels and we're looking for the breakout and the retest. I am horrible at drawing. So that would be a long one, or we can look at short as well. And I don't know where this line is from. So that's the idea of the breakout and retest and kind of what they look like and what we should be seeing. So let's jump into a few more things about it. So we've gone over what the entries look like, and I want to talk about setting stops and our limits. The first point here we see is always enter the stop loss and take profit upon entering a trade. I do this with all of my trading, with Forex, with futures, with options, with metals. You never know when you're going to enter something and just some crazy shit's going to happen. Price is going to shoot. If you don't enter your stop loss and take profit right when you enter, you're leaving yourself at risk. Not to mention you may forget about it or so on and so forth. So we have to enter it right when we enter the trade. You can watch the stops and limits video, which at the time of recording, this is not up on the channel yet, but it will be soon, to learn more about how I set stops and limits and kind of trade management. We're going to go over it in a moment in the charts of just what it looks like. But the idea is this: we're setting a stop if the pattern is broken. So if we're taking a breakout long or buying, we want to set a stop down below the swing low. So if the price falls back in to the range, we're out of it because the break and retest is not happening. If we're going short, we want to set it back up in the range because if price moves back up in there, the break and retest is not playing out how we thought, and we might as well get out. We use a 3-to-1 ratio, which comes out to a 2-to-1 risk to reward because of where our take profits are. And if that goes over your head, watch the stops and limits video. But the idea is this: we're setting our stop and we're risking, let's say, 2%. We set TP1 at 1 time risk. So if we're buying, our stop is, let's say, 50 pips down. Our TP1 is 50 pips up. Our limit, the final take profit where we close the trade, is 3 times the risk. So if our stop was 50 pips, our limit would be 150. So again, we set our stop based on where we think it is and choose our position sizing based on that. TP1 is an equal distance away, and the limit is 3 times away. When price does hit our TP1, what happens is we close half the trade. So using the example of $50, when price is at TP1 right there, we'd be $50 in profit. We're going to close half the trade and take $25 off the table and leave $25 open right then. And then what we're going to do is we're going to move our stop up to where we entered the trade originally, which means if price comes back to our entry, it closes for $0. We took the original $25 and we closed the other half for $0 and we made a little profit. What we're hoping for is price to continue on to that final TP, which would be an additional $75, and we'd get $100 total profit with $50 risk. So let's again jump to the charts and see what this looks like. All right, this is going to look at take profit and stops. So the first thing I'm going to do is just show you how to calculate it. You can do it however you like. There are great tools like, I have this one saved on my desktop, the position size calculator from, oh, the window's too small to get rid of the ad. Oh, there we go. Where you can use the position size calculator, type in your account size, your risk ratio, how many pips away your stop loss is, and it'll tell you to buy that many units or that many lots. But I do mine in TradingView. So I open the order panel. I am on a $1,600 paper trading account, so it's not real money. And let's hide that. So we're not entering here. Ignore the actual entry. I just want to show how I calculate. Say I want to enter here where price is right now at the market with the market order. And we want to set our stop below these swing lows. So we're setting it at 1.753. So we click stop loss, type in 1.753. I risk 2% on most of my accounts. There's one account where I risk 1%. So we type in 2 there and risk. And that'll automatically give us, see it's changing, it'll automatically give us the amount of units to buy. So that's where our stop is. Price is that, it would be $32 or 2%. You can also just type it in down there if you want to do a set amount of lots. But this is the way I do it. I set my stop where I want, and then I set the risk. Because I think it's more important to put the stop where we think is wise than it is to base our stop off how many units we want. That makes no sense. So we set the stop first, then set it to 2%. It's about 40 pips away, which means our TP1 will be 40 pips away. So I would type in 40 and take profit, and then I actually just copy that number. Then we want a 3-to-1 risk to reward ratio. I'm gonna call that 40, so that would be 120, right? We want our TP2, our final limit, to be 3 times as far away as our stop. So our take profit is 120 if our stop loss is 40. And we'd buy, and it'd look like that. Now we need to add in our TP1. So I right click trade to be a sell limit, right? Because we're doing a buy, so we want to sell at a certain point. If it was a short, we would do trade buy limit. Oh, it would be down here. Trade buy limit. But for this, we're buying, so we want to set a sell limit for TP1. We're going to take this and we're going to paste in that number we had. We're going to take this and we're going to cut it in half, which is about 5,090. And we would click sell here, and boom, there's our TP1. So that's how I do it myself. I'm going to get rid of all of that. Again, choose where the stop is first, then the risk percentage, then we copy, if it's 50 pips away, we would copy it over into take profit. I copy that number and save it, and then we change it to 150 for the final one and buy it. And then we go in and set our limit. Alternatively, you could just come in here and say, okay, this is where we want our stop, that's where we want our take profit. 2% risk, right? 3 times the risk. We could buy. Oops, I think I clicked sell. We could buy at 2% risk. We know that's 50. And we could do some math and figure out what 50 pips is and place it up there. But either way, we want a 1-to-1 risk to reward on the TP1 and a 1-to-3 on the final CP. So where I actually set my stuff, I'm gonna get rid of the order pane. So on this one, which I actually took, and I'm not gonna use, or I'll start like this. So I would have entered at this candle right here. That's not a strong enough of a reversal candle, so I would have entered there. I'm gonna do the same thing I did before and just drag it way out so we can see it, and I'm gonna mark it. So we would have entered there. I would have put my stop decently high on this one because I want it above that. It's tested all the way up to there. So I would have put my stop there, we'll say. And I want a 1-to-1 risk to reward. So TP1 would be there. And, oops, I'm still drawing. And TP2, our final limit, would be somewhere down here. And now I'm gonna get rid of that. So, we're entering here with a short. We're putting our stop above the little swing. I put mine above these because it had tested that. And we're setting our limit the same distance away. And you can see from entry, that stop is the same distance away from TP1. Now, when price hits our TP1, it's gonna close half the trade, right? We would set a buy limit there for half of the trade, and it would close half the trade. And then what we'll do is we'll drag this stop down to entry. So let's just say, for numbers' sake, that we're risking $100 per trade. If we enter here and trade goes up to here, we lose $100. Similarly, if it goes down to here, we'll be up $100, but we're closing half. Therefore, we're getting $50. We're booking $50 profit. We're moving stop to entry. On this one, price would have come back up and hit our entry here, right? If we just move this over, price would have hit our entry. So we would have gotten $50 on that, and then we would have gotten stopped out. Let's go over to the Singapore dollar yen, just to show you another one. So this one was another horizontal one where we tested right here and then we reversed up. Looks like I took mine on, you can see the arrow, I took it on this candle. So we're gonna do a long position. Now in this one, we're entering there roughly. It's a little low because there we go. We're entering there and the stop would be right there below the swing low. That's where I set my stop. The idea, and I mentioned it in the previous slide, is we want to exit if the pattern is broken. We're setting a stop not because we want to just bail every time. We're setting a stop strategically so that if this pattern is broken, if it's not going to be a break and retest, get out of it. There's no reason to be in it and hope it goes back up. So again, I'll just draw some lines. We'd enter right there. Our stop would be right there. And our TP1 would be roughly where it is, right? And then our TP2 would be 3 to 1. And I'll do that. So let's get rid of this 'cause it's kind of cluttered. And let's see here. We would have entered here. We would have taken TP1. So again, using the $100 number, that's $100 worth of risk. We would have taken 50 off the table here. And we would have moved this stop here up to entry. Look how even my lines are. We would have moved stop up to entry. Now this one is just a bummer to look at on the chart like this, knowing what we know now. We would have come awfully close to TP2 up here, and then we actually would have stopped out here. Is what it is, just part of how it goes. And I'll give you one more example on a diagonal one. So here's the Kiwi yen. I was entering on the 4-hour chart on this one, not the 1 hour. And it's exact same principle. So we entered here, right? There was these two candles down and this big engulfing one, relatively big to the ones previous it. We would set our entry there. We would set our stop down below that swing low because we want to exit as soon as that pattern is broken. With some pairs, including the New Zealand dollar, I leave a little bit of extra room because sometimes when markets close, depending on your broker, at 5 p.m. Eastern time, sometimes you will get a huge spread happening. And most brokers do that. It's pretty normal. It's because institutional flow is way down. So with New Zealand dollar and with things like the dollar peso or the Singapore dollar, I often leave a little bit of extra room on my stop. Anyways, we're entering there. Our stop is down here. And our TP1 is 1-to-1 risk to reward. Is about right there. I'm just going to put it there because that's where it was. It would have hit on that candle. And then our TP2 is 3-to-1. So I'm going to drag that up roughly there. And then we'll get rid of this. So when I entered this, I'm entering here. I'm setting my stop. That was a little lower down there, right? If it goes down below that, it's kind of not following the break and retest pattern and was not a bad entry. We can take good entries that fail, but was not playing out how we wanted. So price would have come up to there. It would have hit our TP1 and half of it would have closed. We would have collected 50 and we would have moved the stop to entry. That's just to protect our wins. A lot of trades are just TP1 and stop. It's not a great risk to reward ratio, right? $50 gain to risking 100. But price on this one did go up to our TP2. Now that's 3 times. So if you had the full position open, it'd be $300. But because we only have half open, because we already are protecting our winners, it's 150. So the total collected on those trades is 150 plus 50, or 200 for 2 to 1. I know it's confusing because I say 3 to 1 risk to reward, but it really comes out to 2 to 1 if it hits. And this one would have. Once it hits that, the trade is closed. I don't care that it kept going up. I don't care that it came back down through it. I've chosen 3 to 1 for a reason. It's because if I go over that, I often miss it by a few pips. If I go under that, I'm leaving some on the table. And with the 2 to 1 risk to reward ratio like that, we can do the math, but we talk about it in the stops and losses video actually. With a 2 to 1 risk to reward ratio overall like that, you essentially need to win about 35% of your trades to be profitable. 35% of your trades need to go to TP2 versus a loss. And many, if not most of the trades will end up TP1 and stopping out. So the 3 to 1 or the 2 to 1 risk to reward ratio overall keeps everything safe and makes it so your win rate doesn't have to be super high. But that's it. Again, you can watch the stops and losses or stops and limits video where I go over in more detail a little bit about risk management and why we do it the way we do it and the kind of data behind it and how to get streamlined with it so you don't even have to think about it. But the idea is simple. We want to set the stop below the swing, below this little swing if we're entering long. If we look at one where we're entering short, like that first one we looked at, the pound Canadian dollar on the 1 hour chart, right? We're going short, so we want to set it above, up here, above the swing. We're setting TP1 one times risk away, and TP2 3 times risk away. When the trade hits TP1, move that stop to entry. Protect your profits. Don't leave it all on the table. And that's it. For the most part, I let trades ride. There are a few examples where I won't, and that's if there's big news coming out or there's some sort of something happening, like an election. If I'm in a trade and I'm up, I'm 10 pips away from my TP and election results are about to come out, or maybe the NFP, the non-farm payrolls are about to come out or something, I will often just close my trade and take my profits. That's up to you. It's a personal decision, but I'm not really in this to gamble. I am playing the charts and the technical analysis, and I do much better when I close before news events. So that's that for setting stops and limits. All right, so now let's put it all together. Just a little recap. I first want to say, if you have any questions, you can look in the description of the video below. I have my personal Telegram there. It's on my computer and phone, so you can send me a message for free, ask me some questions or ask for some examples or whatever. I'm happy to help out. You have my email. If you're not on Telegram, you can email me. I do not get emails to my phone, but I do to my computer, where I often am. If you want to go over some charts or ask some questions or whatever it is. There's also the Telegram channel where I post ideas from TradingView, my TradingView account, my Twitter, and so on. But if you have any questions, reach out to me. So we're going to wait for the clear breakout and retest. None of that kind of floundering around at the support or resistance line. Then we're going to enter on a confirmation pattern. We don't want to enter just because it's moving our direction and what we thought if we don't have a candlestick pattern to back it up. I know that seems silly. You can do your own research and figure out what candlestick patterns work for you. As I've already said, I'm not great with candlestick patterns and remembering the names, but I look for the 3 inside or outside, the morning stars or hanging mans or whatever, that little doji, and engulfing candles. But wait for a confirmation pattern, right? We have the setup, and often we're just sitting there waiting. There's a setup kind of forming, maybe it's formed, and we're waiting for some form of confirmation. And then we're going to enter, setting our stops and limits right when we enter. One of the things I do before I enter is I check for news or data coming out. For example, if it's 1 p.m. and I want to enter a US dollar trade and the FOMC minutes or Chairman Powell is speaking at 2 p.m., I won't enter that trade because, again, I'm not really in this to gamble. Anything crazy can happen. Right now, we're kind of towards the tail end, hopefully, of the coronavirus, COVID-19 pandemic, and a lot of these numbers haven't been as important as they were when I first started trading, but they're still important and they will continue to be. So we don't want to enter an Aussie trade if the RBA statement is coming out in 6 hours, maybe. It's often better to kind of wait. What I will do is if the RBA statement comes out in 10 hours, I may enter the trade and try to get in a good position long before it comes out, where I can set my stop to entry. So we're waiting for that break and retest setup. We're waiting for the confirmation candlestick pattern. We're setting our TP1 at 1 times our risk and our TP2 at 3 times our risk. We're checking for news or data and make sure we're trading intelligently with some avoiding the kind of gambling moments. And where I recommend you take it from here is go on to TradingView. I left a link down below the video to sign up for TradingView for free. Full disclosure, that is an affiliate link. If you sign up for free, I don't get anything. It doesn't cost you any extra money. If you do end up paying for something, I get a little bit of money off my TradingView, just to be completely honest and transparent with that. But you can do most of it with TradingView for free. There really shouldn't, to test this breakout and retest strategy, in my opinion, you absolutely should not need to upgrade to a pay plan. But look for the patterns, begin drawing your zones or lines and seeing if you can find some retests. And then as always, I say it at the end of every video, demo it. Don't go live with it. Don't put all your savings in it and be like, this is the holy grail and I'm going to do it. This is one part of how I trade. You can check out our other videos, my other videos for other ways that I trade and other entries we take. This is one way. So make sure to demo it. I feel like I say this to deaf ears quite often with other people I work with. Demo it for some time. Don't demo it for a couple weeks. Take a few good trades and say I'm going to put all my money in this. Demo it for months, 6 months. Demo it for even 3 months. The longer, the better. I demoed for over 6 months before I was taken live. And then when I joined a prop firm, I had to demo again for 6 months, even though I already had years of trading experience under my belt. So don't be afraid to put in the work. If you actually slow down, look for the patterns, demo it, really figure out your groove with it. Like my little rules I figured out of wanting a bigger breakout than just those little ones, or the candlestick patterns I take. Yours may be different. Find your groove and what works for you. Don't forget to journal. You can check our journal or keeping track of trades video. Don't forget to journal or note down what's working and what's not. And don't be too greedy. You can be eager to make money or eager to make this work or eager to figure it out. But remember that slow and steady and gathering information and analyzing is what this is all about. So remember, you can hit me up, shoot me a message at any of the links below, and we'll see you next time.